In crypto, it's often said that we are still early, meaning that most coins and tokens still have lots of potential. This, my friends, is an understatement. To put things into perspective, the total market cap of stocks is $90 trillion. The total market cap of precious metals is $15 trillion, and the market cap of just the US dollar is over $20 trillion. Meanwhile, the total market cap of crypto is only around $1 trillion, even though some coins and tokens could someday become serious competitors to stocks, metals, or even national currencies. This means that crypto still has unprecedented potential. So today, we're going to tell you exactly how it will achieve this potential, when this could happen, and just how large the returns could be. The first step to achieving crypto's full potential is awareness and education. This is simply because crypto can't receive investment or achieve adoption if nobody knows about it. It also can't receive investment or achieve adoption if people don't understand how it works or why it's valuable. Now, it's safe to say that awareness of and education about crypto has been lacking. Most of the awareness has either come from mainstream media, which is often aligned with the financial establishment, or from misleading advertisements, promotions, and partnerships, often from explicitly pro-crypto entities. Most of the education has also come from questionable sources, with most media outlets and influencers pushing content purely for the purpose of getting clicks or token allocations. The result is that there is a general shortage of quality information about crypto, but this does seem to be improving. That's ultimately because more and more people are looking for quality information about crypto. The sooner crypto can establish reliable and trustworthy sources of information, the sooner that it will get the right kind of awareness and the right kind of education. And if you want to help increase the quality of crypto awareness and education, go ahead and smash that like button. Now, this falls into the second step to achieving crypto's full potential, and that's regulation. This ties into awareness and education because regulators need to be aware of and educated about crypto in order to write good regulations. Institutional investors also need to be aware of and educated about these regulations. Now, as we've seen, regulators around the world seem to be both aware of and educated about crypto, for the most part. This is fortunate or unfortunate depending on the jurisdiction in question. It's becoming clear that some are pushing for pro-crypto regulations, while others are pushing for anti-crypto regulations. Believe it or not, but any kind of crypto regulation will be a net benefit for the crypto market, so long as it doesn't involve an outright ban, of course. This is just because investors, notably institutions, will finally have some guidance about what they can and can't do with crypto in their country. And once these investors and institutions get involved, you can bet that they're going to lobby to improve crypto regulations to better suit their needs. The only variable is time. If you watched our video about Operation Choke Point 2, you'll know that the US crypto crackdown may not end until after the 2024 election. As for other jurisdictions like the UK and the EU, most of their crypto regulations won't go into force until later next year, also in 2024. Until that time, it's very unlikely that we'll see serious inflows into the crypto market. Without regulations, investors of all kinds just won't feel comfortable investing in crypto. Now, this relates to the third step to achieving crypto's full potential, and that's investment, specifically investment from institutions and high net worth individuals. Of course, these entities hold most of the world's wealth. This is a consequence of having currencies whose supply is manipulated by people in power. Now, like all investors, institutions and high net worth individuals ultimately want to maximize their returns. As it so happens, Bitcoin's BTC is estimated to be the best performing asset of all time. From an initial price of 9 cents to all-time highs of over $69,000, BTC has pulled a 760,000x return. Like all assets with such high returns, BTC's returns are likely to diminish over time, but it is still likely to outperform most other assets for the foreseeable future. This fundamentally depends on how much BTC will see in terms of inflows. Now, this is impossible to predict, but there is one benchmark to keep in mind. BTC is considered by many investors, including BlackRock, to be digital gold. As a result, it's generally believed that BTC's market cap will someday be similar to that of gold. Now, gold's market cap currently sits at around $13 trillion. BTC's market cap is currently sitting at around $500 billion. So, a bit of quick maths will tell you that BTC catching up to gold would mean a 26x increase in its price. This would translate to a BTC price of around 670k. Some have argued that BTC has additional value since Bitcoin is technically the most secure network in the world. This makes it the ideal base for other ecosystems, including payments, which can be supported by the likes of the Lightning Network. And speaking of payment networks, smart contract cryptocurrencies are generally believed to be the ones that will capture this market share. This means that they could someday displace payment processors and other financial intermediaries. Now, the total market cap of these companies is over $2 trillion. Given that the market cap of Ethereum's ETH is currently around 200 billion, matching analogous companies would mean a 10x increase in price. This would translate to an ETH price of over 15k. But this likewise assumes that Ethereum is just a payments network. It is obviously much more than that. As such, one could argue that Ethereum is still near the beginning of its adoption curve. And this pertains to the fourth step to achieving crypto's full potential, and that's adoption. Now, for reference, it's estimated that less than 5% of the world currently holds crypto. This implies that should more people choose to hold crypto, its price should have a great deal of upside potential. But of course, holding crypto is not the same as using crypto. The former effectively constitutes investment, whereas the latter is actual adoption. On-chain data for the largest cryptos suggests there aren't more than a few million daily users, a mere fraction of the world's population. Therefore, potential gains are even larger than one would expect by merely extrapolating hodlers. Now, for those unfamiliar, there are ultimately three reasons why people adopt crypto. The first is for profit, the second is for fun, which is very much intertwined with the first reason, and the third reason is out of necessity. And it's this third reason that has resulted in most of the actual crypto adoption. It's well known that the so-called Global South is looking to move away from the US dollar, and there have been some reports that suggest that crypto could be a part of their escape plan. For instance, Iran recently gave the green light to companies in the country to use crypto for international trade. Russia is reportedly considering doing the same and is even considering mining its own crypto. And just like the adoption process at the individual level, the adoption process at the national level will eventually involve nations and national activities that are much more appetizing. This could happen much sooner than you think because central banks will be allowed to hold crypto starting in 2025. Now, this ultimately depends on the progress of the fifth step to achieving crypto's full potential, and that's innovation, particularly around user experience and privacy. Logically, it's going to be hard for individuals and institutions to adopt crypto in any meaningful way if they must fumble with hardware wallets all day long. That's why crypto wallets are a niche that you need to watch. There have been significant developments on this front, the most significant of which is the gradual merging between hardware and software. It might sound silly, but a crypto phone like Solana's Saga could be the solution to crypto wallet UI and UX. And it's not just wallets either. A lot of innovation is happening at the blockchain level. If you watched our recent Ethereum update, you'll know that its EIP 4337 upgrade from earlier this year will make it possible for any phone to have crypto phone type properties, mainly hardware wallet level security. You'll also know that it will make it possible to create dApps with no gas fees, or rather, dApps where the user doesn't have to pay the gas fee. Constantly checking and accounting for transaction fees is another huge hurdle to crypto adoption, and it's one that many crypto projects are attempting to overcome. For what it's worth, though, the innovations around wallets and privacy continue at a rapid pace and should be in place by the time the next crypto bull market comes around. This will further facilitate crypto investment and adoption at both the individual and institutional levels. There is just one thing that crypto will need then. So, the final step to achieving crypto's full potential is full decentralization. Make no mistake, without decentralization, everything that I just mentioned is off the table. That's because if crypto is centralized, then it can be controlled. And if it can be controlled, it'll end up like the existing systems we have. Newsflash, but the entire purpose of crypto is to replace the existing systems we have with something better, starting with our monetary and financial systems. Naturally, the technology that underlies crypto is extremely powerful. The only way it won't fall into the wrong hands is if it's truly decentralized. Anyway, speculation aside, the fact of the matter is that most cryptocurrencies are currently not decentralized enough to evade control. It stands to reason then that these cryptocurrencies will not be the ones that make it. In other words, if you hold centralized cryptos, you're not early, you're late. Very late. That said, this depends on whether the centralized cryptos you currently hold can become decentralized. To figure this out, you just have to ask one question. Is this crypto capable of building its own infrastructure and ecosystem without relying on a single set of individuals or institutions? From our perspective, one of the primary reasons why so many cryptos are so centralized is because of funding. Early investors in crypto projects want to see returns and often try to control the project to that end. This creates incentives for crypto projects to cut corners on decentralization to ensure that their investors are quickly rewarded. Even without these innovations, though, the next crypto cycle looks promising. If you're watching this video shortly after it's been posted, you are perfectly positioned to take advantage of the opportunities that are coming. All you need to do is pay attention and not feel rushed. After all, you're still early.
I feel nauseous, believe me. Never had a lot of shit come easy. Had to work hard, struggle just to be me. Had to rise up just so they could see me. Did what I had to do just to feed me. And what was left over I put towards my dreaming. But the only thing in life that has meaning